It's going now.
Okay, good. And away we go. Well, welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest-growing mortgage investment firms, and Patti Cohn of Pacific Union Realty. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. Check them out. Let's see, the vacations are free. They only request a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is brush up on baseball, since baseball season's upon us. So we've got a great show because there's a lot of good articles that you two want to talk about. Mark, let's start off with you.
Absolutely. So, my company, Pacific Private Money, makes loans to consumers and real estate investors. We're an alternative to bank financing, and but as a lender, regardless of whether you borrow from a bank or borrow from a private/hard money lender, those of us in the lending industry, need to track what's happening in real estate. And what I have today is not just the usual, rear view mirror look at what's been happening in real estate, because let's face it, most of the statistics that we talk about and that are printed in the newspaper are really rear view mirror. What happened last month, the month before, the last several months.
I want to hear what's going on in the future.
Right. Well, we've got a couple of forward-looking things to talk about, but before we get to that, I do want to do a little rear view mirror looking at, because one of the most closely followed indexes in both the national and regional real estate industry is the Case-Shiller Index of home sales. And so the home price survey for January, they're always a couple of months behind. They're about 90 days behind in real time. But for January, they came out this past week. And what's interesting is it says, the article starts out that it's a little too early to say that San Francisco home prices have peaked, but their monthly statistics have actually shown that in January, for the first time in a long while, the home prices surveyed on the Case-Shiller Index for San Francisco area actually went down 1%.
Huh.
Now, year over year, they're still 8% higher. Now, last month, year over year, they were 9% higher. So we've had a 1% interest decline, and that's actually, I think, is healthy, because my fear as a lender is that we've got irrational exuberance happening in certain sub-markets of the Bay Area where maybe tech money and overpaid, or let's just say highly paid, overpaid is an opinion, right? Highly paid tech workers are bidding prices up and up and up, and in some cases, and according to some surveys, moving out the middle class property owners and bidding up home prices. But we'd like to see a healthy market, and a healthy market in general is generally defined as around a 4 to 5% annual appreciation rate. That seems to be a sustainable appreciation rate historically, looking back 30, 40, 50 years for real estate. And when you're above that number, it's problematic in many ways, because people start getting priced out of the market. It's not good, and it's not sustainable. So the national index is at 4.5%, which is a healthy number, and that number is interesting in that one of the forward-looking indexes, a new article I just came across, that there is a new forward-looking index for the U.S. housing market, and this is published by the financial services and insurance firm Nationwide, and they survey 373 metro area housing markets. So this is all over the U.S., and they claim that the housing market right now today is at its healthiest since 2001. And again, unlike they in promoting their new survey, which they sell, of course, to the industry, and so they want to make money off it. Unlike most other housing indexes or surveys, this new report provides a look into the future instead of a rear-view mirror. And they say, based on their survey and their metrics, and I'm going to sign up for this, and so I hope to have in a future show a little bit more detail on what they use for their data inputs. But they are predicting that we are not going to see a downturn in the market in the foreseeable future, which for them is in the next year, the next 12 months.
Patty, you want to comment on you?
Well, yeah, I mean, I would say, are prices peaking in the Bay Area? I'm here to tell you, being in the field every single day, that I'd say it's plateauing.
Okay.
And we're having a very, very strong, very, very slow start to the year. You would think by April 1st, 2nd, usually by April 15th, that's when we peak in terms of sales, but we are barely heating up this year.
Well, a lot of people are kind of holding off until after tax season, right? Because they kind of want to see what kind of tax bill they're going to get. Is that true?
Not really.
Really?
I mean,
Interesting. Okay.
March, we should have a much better March than we did. Not that there's anything wrong with it, it's just continued low inventory.
Okay.
And more pendings are going on now than 13% more pendings are happening right now than they were this time last year, which tells us it's going to be really a later season than usual.
Okay.
And in a way, that's good.
That's good, yeah.
Yeah.
It kind of evens it out for the whole year. Then.
Right, you're exactly right. In fact, that's another forward-looking index. And in fact, contracts for sales of existing homes, which you refer to as pendings. So for those of you listening out there, pendings means home sales that have gone into contract but haven't closed yet, that would presumably close in the next 30, 45, 60 days. They are up sharply for the month of February, according to Bay Area statistics. So that is something that we can look forward to in terms of housing health. But you point out the actual volume, the unit sales, and we've talked about that show after show, that the actual unit sales are really nowhere near, and in some markets, at a number that's 50% of where they were in 2004, 5, and 6 when we were at the kind of the height of the last bubble.
Yeah, I mean, the point I was making is, in a way, it's good that we have low inventory because it's keeping prices stable. And so the rate of appreciation has slowed dramatically to the point where if we had a glut on the market, they would probably go down.
Yeah, I
I'm
agree
being honest
also.
about
It
that,
gets me a little nervous, like in the Silicon Valley when things were just spiking during the .com.
Yeah.
It's like it's a lot better to just kind of nice, slow, steady growth.
Yeah.
It's like inflation. A little bit of inflation is actually good. You just don't want to have, massive inflation or deflation.
Which is why we're still having multiple offers, which is why, in spite of, number of sales are way down. And if they were up, I would think we would have a softness in price. So it's still supply and demand.
All right. Now, I asked you before you came in, before we started the show, Patty, how your listings personally, because you've been for many years one of the leading, if not the top, listing agent in Marin County. So how are you mentioned your listings were, I guess, slower than you had hoped they'd be?
In general, in all of the Bay Area, the listings are slow coming this year. And I'm not sure really what it is. I mean, we didn't even have a winter. A lot of times it's weather driven, and so it can't be weather driven, because it's been beautiful.
Yeah.
So it's very strange. I mean, I think for a while, last few years, sellers were holding out, not because they're thinking, I've ridden this thing for so long, I am not going to sell it when we're about to go up.
I'm going to guess there's maybe, and then this is just speculation, that people are a little concerned about the economy in general.
Mm-hmm.
And if they are, then they're worried, maybe about their job or whatever. It's like, not that we've had a lot of bad economic news, but just for some reason there's just a sense that I get from people that there's a little bit of uncertainty. And when people are uncertain, they do nothing.
They hunker down, yeah. Well, you would think, I mean, I could see buyers not wanting to buy in that case, but sellers in that case might want to say, I think we're reaching the end of this ride going up. Let's get it on the market.
True. That's good. That's a good point. Of course, they still have to go somewhere else.
Yes,
so
they do.
Maybe that's part of it too.
Exactly.
Anyway, we're going to cut to our first commercial break here, and the theme is I'm going to try to do. Remember Mel Allen? He's going this week in baseball. You don't remember that? Before your time. That was in the 1980s. Before your time. Okay. No, but so today's trivia theme is brush up on baseball. Here we go. What is the maximum number of strikeouts a pitcher can record per game? Right. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Again, we're talking baseball here. What is the maximum number of strikeouts a pitcher can record per game? One more time, call 888-912-1190. Make sure to give your name and your email address and speak slowly. Spell out your email one letter at a time. And don't touch that dial. When we come back, we're going to have another special trivia contest, as well as a couple of interesting emails for our hosts and co-hosts.
Why would there be a maximum strikeout?
I know, I'm thinking it's a trick question, because what if it goes into extra innings? In theory, it could just continue to go on in extra innings over and over and over again.
You guys just have to
Just have to
Yes.
wait. Little patience.
I realized as I was saying it, I didn't mean to say that your listings are down personally, but in general.
Yeah, it didn't.
Yeah.
It didn't
Yeah,
sound like
I
that.
didn't hear
Okay,
it that
good.
way, no. But it's like, it's such a small scale and one agent that it doesn't even matter. You
Yeah.
know.
When it's Patti Cohen, it does.
I have 5 listings up in Napa right now. I've never had
Napa.
5 Napa, in 5 at one time. And 1 we're closing in 2 weeks. Anyway,
That's great.
3 we're just bringing on. And all I'm doing is I'm calling expireds up there.
Oh, yeah.
Only over $1 million.
Yeah.
I co-listed with somebody else up there local.
Yeah.
And they do everything. And,
Yeah.
and they're so easy. There's this kind of, I only do over $1 million up there. And there's this kind of feeling like we're all down here hobnobbing with
Yeah.
the well to do
And then
this.
everybody wants to buy a winery area type of thing. No, but that's really smart because the thing is that you're well known. So at least it's not some who.
Right.
You're known up there too. So.
I don't know if I am.
I don't
but-
know.
but
If you're
really-
known in Marin, you got to be known in
I
other
guess.
places.
Well, your name, you
That's
happen to
yeah,
have,
yeah.
share the same name as VR Cone Winery.
Oh, there you go.
See?
And I mean,
Oh, yes,
basically,
we're related.
what I'm telling
We
you is
don't
2 for the
talk
price of 1. So what's not to like about that?
Yeah. All right, you ready?
Yeah.
Here we go. Well, welcome back to the Best of Investing. I'm Edward Graham, your host, along with Mark Hunt and Patti Cohen. When we cut to the first commercial break, we asked this trivia question: what is the maximum number of strikeouts a pitcher can record per game? And I'm going to change it because you guys you might have guessed something. What is the maximum number of strikeouts a pitcher can record per 9-inning game? Because you were talking about extra innings.
Well, my math tells me it's 27.
And Patti?
I have no idea. I'm not even going to fake it.
Well, you guys were actually correct before. Right during the break, what'd you say?
I said, why would there be a maximum?
That you're right. There is no maximum.
There you go.
Yeah, there is
I
no
do
limit.
have an idea.
And the reason is because the catcher could keep dropping a third strike. That's it.
Ah.
So it wasn't necessarily a trick question. Okay, now next week we're having a little special trivia contest where the winner is going to get a 2-night stay at the South Coast Winery. And let's see here. If you're looking for an ultimate wine country escape, experience South Coast Winery Resort and Spa in the heart of Southern California Temecula Valley Wine Country. Enjoy a tasteful experience at this 39-acre luxury resort featuring a warm and friendly tasting room, award-winning restaurant, decadent 3-story grape seed spa, then retreat for the night on your very own oversized private villa or suite with a fireplace, private patio, and vineyard view. Check them out, South Coast Winery Resort and Spa. Relax and enjoy. Call 800-730-5042 or visit wineresort.com today. And here's the contest question. Let's see here. Almost 1/3 of young adults will wait less than 1 second before doing this. What? Now here are the rules. You have to email edward@bestofinvesting.com by midnight tonight, the answer, and we will take all of the answers that are correct and randomly choose from among them and announce that next week. Now, get right into email time. So Patti, we've got an email that we received from a listener that says, I guess this person's heard of this term and didn't really understand it. Can you explain a seller credit for renting back situation?
Oh, sure. It's very common right now because of the issue. One of the issues why we have so little on the market is because sellers don't know where to go. And they certainly can't, if they find their dream home, they can't make an offer on it because nobody wants to take a contingent sale. So one of the remedies for that, as far as a bridge loan from Mark, but you can also offer the seller a rent back.
Okay.
Because that seller is going to be jumping off the cliffs because they don't know where they're going. So what would season the deal is, okay, we'll close in 30 days and we'll give you 60 or whatever days to rent back. So you live in the house as if it's your own, but you no longer own it. You're not paying taxes, you're not paying insurance, you're not paying the mortgage. but you're paying the buyer some rent, and sometimes it's,
Negotiated between the two.
yes,
Okay.
and that kind of leads us to, you know, how do you win? Because that's what you offer a seller if you're competing in a multiple offer situation.
Yeah.
So how do you win in the multiple offer situation? Obviously, it's price.
Yeah.
But aside from price, what can a buyer do to really make themselves stand out?
Yeah, if the buyer is not like absolutely needing to move in by a certain date, then that's a great solution.
Well, it's an even better. You're exactly right, because many buyers now don't need to move in because they say, "Great, because we still have to sell our house, and we didn't want to make it contingent, but we're lucky we can afford to buy this without selling that, but we need the time." So it's a win-win, and it's really brilliant. So that, and sometimes, and if you're competing, sometimes sellers don't want that. It's a vacant house, they're good to go, they've already moved, I want to close it in 15 days. So what can you do as a buyer, other than price, which is the obvious? You know, one is if you have cash, it stands out, but cash is not as big as people think in terms of that edge.
Well, especially if they're going to get a loan anyway, it's cash to the seller.
Exactly.
You know, and I'm going to guess ahead of time. You'll have to tell me if I'm wrong, but I'll bet that in those situations where it's a seller rent back, I'll bet that they with the pride of ownership of giving, even though they don't own it anymore, I'll bet that they still do a good job of taking care of the house.
Yes, they do. We rarely have problems, and often we have I just did a rent back on a $2.3 million house, and there was a $10,000 security deposit.
Oh, wow.
Yeah. Yeah, so even though you're staying 30, 60 days, things could happen.
Yeah, sure.
So we need people at stake in the matter. So what else can you do as a buyer? Because everybody wants to know, I got to get that edge, because I just read.
So go ahead.
Yeah.
What else can they do?
So first of all, you have to come in with either proof of funds if you're doing cash, you know, a bank statement or some statement, or you need to come in pre-approved. I mean, do not even be shopping right now if you're not pre-approved. It doesn't make any sense, whether or not there's multiple offers. The other thing people are doing, and I do not advise it, whether I'm representing seller or buyer, is they're waiving inspections.
Yeah. So how do you know, obviously if it's a newer house, you're probably not going to have the same, you know, termite issues or whatever. How, or I guess you just sort of look and go, well, we might have $50,000 worth of damage here, and just kind of put that in the price effectively, right?
Well, I mean, if you're bidding up, I mean, San Francisco's big on going way less than what it's worth. You put something on for $1.2 million that's worth $1.5 million, it's going to go for $1.7 million. That's what San Francisco does. So who cares if there's $10,000 or $20,000 worth of stuff? But that's what lawsuits are made out of in this kind of market, especially if we are plateauing or peaking. I remember this back in '89.
Yeah.
Well, my agent wouldn't let me get inspections. The seller wouldn't let me get inspections. And now we're seeing more and more of that. So
if you waive them, though, I mean, in theory, you're basically taking it as is.
Yeah.
And I mean, I'm sure any lawyer who wants to try to help things out will look through, you know.
help out.
I mean, I'm sure. The thing is, I guess there's still disclosure laws, though.
Well, the seller has a duty to disclose,
Yeah.
but it is up to the buyer to find out what the condition of the house is right now. And most of the time these days, we as listing agents, we're going to do pre-inspections anyway.
So the seller is going to say, there's something wrong with the house, but
That's
I'm
what
not
it
going to tell
is.
you. You're just going to have to
Well,
guess.
you're right. You can sue anyone
Edward's
for
trivia question.
Yeah, exactly.
you know, you can sue anyone for anything, and so I would think that in this age, where people are suing anyone for everything, that if you bought a house, you could probably, and that you were forced, so to speak, to waive inspections. I can see where if there was significant termite damage or something, you could find an attorney who would represent you and say, look, you know, you were coerced by professionals not to order
There's been
them. Or,
cases.
yeah.
Yeah.
So
Okay, so I got a little story here that I just heard that it will probably either heard a situation like this before, or this you'll go, brother. So this young agent had a listing and had let the public know we're not going to accept any offers until Friday. Well, this one agent wanted to put an offer, so the agent waited until Friday. But on Thursday, the listing agent sends out this email that says, "Oh, we just accepted an offer."
Very common.
Very common. Now, the buying agent was trying to respect the rule, unwritten rule of, gee, if they're not accepting offers until Friday, I'll wait till Friday. But, and so the buying agent and the buyer probably can't really sue because they don't know if their offer would have been accepted. But the seller I would think, could potentially sue their agent because more offers were about to come and they already had accepted.
Yeah. Well, it depends how the seller was counseled, because we always leave it up to the seller, and I give them the pros and cons. We can, you can't do both. We're going to either accept offers as they come in, or we're going to wait till Tuesday and look at any and all offers.
So it's possible that the seller had said, you know what, I know you said we'll wait till Friday, but this offer on Thursday
It's too good to be
is
true.
too good to be true.
Very common.
Yeah.
I mean,
all they did though is that you just upset a lot of agents who were probably going to put an offer.
Absolutely.
Absolutely.
Wow.
Yeah. I mean, I just went to a legal seminar on Tuesday, and that very issue came up, where the buyer that waited sued and showed them this was my offer was going to be. I mean, who knows if that's true or not? But and then the seller got upset. But I counsel the sellers all the time, saying, you also run the risk if you don't take this offer right now. I don't advocate that they take it right now because I can kind of tell if it's going to be multiple offers.
Yeah.
But sometimes it's not, and they say we want to wait. So if we don't get any offers on Tuesday, we still have this buyer one hanging around. They could very well lower their offer by Tuesday.
Yeah.
And that's a little scary.
It's sort of like Shark Tank when they
Yes,
said don't walk out of the room. Who knows what happens?
Shark Tank.
Wow. Well, so in that case, the buyer, that one situation where the buyer sued, saying this is the offer I was gonna present. I mean, that's kind of hard because they didn't present it, and who knows if it would have been accepted anyway compared to what other offers, because they didn't even know what offer got accepted until after it closes.
Well, and also it's not up to the buyer to sue because the seller made the choice, but the seller could sue saying I wasn't represented properly.
That's my point on that.
Yeah.
Okay, tell you what, we're going to cut to a second commercial break here. When we come back, we have a very interesting question for Mark that has to do with choices in investing in mortgages. All right, second commercial break. Trivia question, again, brush up on baseball. How many outs in an inning? There's an easy one for you. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. How many outs in an inning? Now, we're going to get a lot of calls on that one, so quickly go to your phone and call 888-912-1190. Stay with us. You're listening to The Best of Investing with Edward Brown, Mark Hahn, and Patti Cohen, and our famous videographer, Kramer Herzog. Stay with us. Don't touch that dial. We'll be right back. I always give you a plug there, my friend.
Yeah, you're a good guy. I'll be getting a bill in the morning, I'm
Do you
sure.
like doing we're going to take offers all on Friday, or collecting them as you go along?
It depends on the property.
Really?
Because some properties, I mean, if you're on a busy street and you've got 73 steps up to the top, no matter what price it is, you've got a narrow market.
Yeah.
So it really depends on the property, and it depends on how it's priced too. And it depends on the price range. So it's really you really have to have a.
So you do both?
You have to, you
Okay.
have to have really good instinct on the market.
Okay.
So
And sometimes the truth is, I just say to the seller, I don't say anything until I see how the market bears it.
Yeah.
So after a day or two, if I don't have anybody interested, we're taking them as they come.
Yeah.
And I tell agents, we're going to be so nice about this, we're taking as they come, we're not going to shop you.
So if I want to give you a listing on property I own in Portal, Arizona, 200 acres on a road that you can't really get to unless you have four-wheel drive and very scary.
And landlocked too, I'll take
No,
it.
it's not landlocked,
No.
but it's near the border.
That would be, take them as they come. We're not going to, that wonderful buyer that steps up with a lot of money, we're not going to tell him to go away.
Yeah, no.
We will not shop him.
We'll even put flowers in every vase.
That's right.
Okay, here we go. Ready? Well, welcome back to The Best of Investing. Edward Brown, Mark Hahn, and Patti Cohen in the studio here. When we cut to the second commercial break, we asked this trivia question about baseball. How many outs in an inning?
If it's not 3, I'm going to be really mad.
3? It's 6, not 3.
In an inning?
Yeah.
Wow.
It was not a trick question. It was just a question that needed a quick answer.
I actually watch baseball, and I still fell for that one.
Yeah. So, all those people who answered 3, I'm sorry. Please do not beat up the radio. It is not our fault. Okay. So, Mark, we got an email here for you. It says, if I can't qualify for your fund, because obviously this person loves the fund and really wants to invest but may not qualify, because you have to qualify for it. But I want to invest in mortgages, after listening to the show, et cetera. What other options do I have?
So a mortgage investing question. So a little mortgage investing 101 here. So at Pacific Private Money, we make real estate secured loans using private capital. And we have two forms that people can invest with our company, or two ways that people can invest with our company. One is through our mortgage pool fund, which is best described as a mortgage pool, or like a mutual fund of real estate secured notes. People will deposit money with our fund. We put that money to work, and they can keep it working for as long as they want. And right now our fund has been paying out in the low 8% range for the last 2 years. Of course, past performance is no promise of future results, but we believe that our mortgage pool fund, based on the Bay Area loan rates right now, private loan rates that is, will continue to pay out right around the low 8% for a month-to-month interest distribution to the fund members. Now, when Edward said you have to qualify for the fund, this is not like you have to, write a report or run a race or a beauty contest. Unfortunately, or fortunately, depending on what side you're on, the government has mandated that a certain sophistication of investor is required in order to invest in a fund. So we are only allowed to take what is called accredited investors, and the definition of an accredited investor is someone who has a net worth of $1 million or higher, not including the equity in their home. Also, you can be accredited. You may not have $1 million net worth, but if you make $200,000 or more and you're single, or $300,000 or more and you're married, that's also qualifies you to invest in the fund. So there are people who call us and contact us, and they do not qualify as accredited. Can they invest in mortgages? The answer is yes, you can. You can invest in individual notes. That's also known as trust deed investing or mortgage investing. And the way you invest in an individual note is you invest through a broker like Pacific Private Money. We're a licensed California real estate broker and a California finance lender. You can look over loans that we have either already funded or that we are about to fund. And if you like what you see, you can invest your money in that note. Now, there is a form to fill out that the Bureau of Real Estate requires us to fill out, and you're not, in theory, supposed to invest more than 10% of your net worth in any one individual note. But all that aside, you can individual note investing has gained in popularity in the Bay Area, and I know that because we have we continually add new subscribers to our distribution list for people who want to know and be informed of the type of loans that we are offering for investment. Now, why is all this important? Well, I just happened to also bring in an article here, and I don't think this is going to be news to anyone, but more than 1/3 of America holds no emergency savings. This was an article I just clipped out this past week. Even though we have an improving economy, we still have millions of people on the brink of foreclosure. Despite market improvements in the economy since the end of the housing crisis, this article goes on to say, millions of Americans are still on the brink of foreclosure due to lack of savings. Get this, guys. According to their survey, more than 34% of adults, which equals 72 million people, say they don't have any emergency savings. That's up from 30% a year ago. And it goes on to say that 47% of adults said their savings would last 3 months or less. So, clearly people are not prepared or ready for retirement yet. And one of the reasons, well, there's many reasons. The financial crisis, people lost money when the stock market plummeted, people lost money when the real estate market crashed. But what's compounded that problem for the last, since how long have we been living with near zero savings rates now? It feels like it's been forever, but it's been 5 or 6 years. So it's very difficult, unless you're really good at picking stock, or you've just stuck with the stock market, you didn't pull out, maybe you invested a little bit and you've been riding the increase in the stock market over the last 5-6 years. But if you haven't, and many people clearly haven't, then where can you go to earn a higher return on your savings than the 0.25% that the money market rates are paying now, and the very low bond rates and CD rates that your bank is offering? And the answer is you can take a look at mortgage investments, both mortgage pool funds or individual mortgage note investing. And I work with clients. We have over 250 clients at Pacific Private Money who have invested with us at least once, and we have about 75 plus or minus investors that have invested with us continuously over the last 7-8 years, and they've been able to earn anywhere from 8 to 9, even 10%, depending on the type of note they invest in on their money, with recorded deed of trust on property and conservative loan to values.
Include me in that list, because I've actually invested in both the fund and the individual notes.
So mortgage investing is something you should know about. So if you're hearing about this for the first time, or you've heard about it, but you've been meaning to look into it, but you haven't gotten around to it, you want to find out how you can earn 8% or even more on your savings and retirement accounts. Your IRA accounts qualify for investing in vehicles such as this. Go ahead and check us out. Either call us or visit our website. Our phone number is 415-883-2150. That's 415-883-2150. The company is Pacific Private Money. Our website for investors, which we'll talk about, that talks about the fund and trustee investing, is located at pacificmoneyfund.com. That's pacificmoneyfund.com. Check it out or give us a call, leave a message. If you call us on the weekend, we'll call you back next week and send you some information. We don't push people into this investment. We're into more of an attraction rather than promotion.
There you go. I like
sales.
That. I like that.
So we will not hound you if you call for information.
We have a little time before the break. Give us a deal of the week. What have you been working on?
Well, we do about 20 transactions per month. One we just got, which is kind of interesting. A gentleman owns a house. I'm not going to say where, because it's a little bit of a situation that may be embarrassing to the client, but he owns a home that's worth over $1 million, and he doesn't have that large of a first on it. It's under $300,000, but it's in foreclosure. Now, the person is expecting, has a very, very strong reason to believe, and we've been able to verify, that he has a large sum of money coming to him within 12 months, but the bank doesn't care. That this bank happens to be Auckland, and Auckland happens to be known to be kind of rough and tumble when it comes to foreclosure. They've waited long enough. They're not going to wait any longer. The guy has a mid-May sale date for his home.
Especially when it's worth over $1 million.
Oh yeah, right, exactly.
So
he doesn't want to sell the home.
Okay.
Now the home is in the name of his business, so we can make him a loan because it's in the name of his business. It's exempt from certain Dodd-Frank RESPA guidelines, because if it was in his personal name, I would be precluded, right? I would not be able to make him a loan to save his house, because Dodd-Frank says we can't make a loan to a person who doesn't have the demonstrable ability to repay.
Oh, what about the 12-month money that's coming in? That doesn't count as ability to repay?
Well, it's a fine line.
Yeah.
So again, we're not worried about it because the company's in his business name. So we're going to make him a loan of $450,000, which will pay Auckland's $300,000, put $125,000 to $130,000 in his pocket to put aside to live on and make the payments on the loan for the next up to 24 months.
While he waits for his
money to come in, for his little windfall to come in, and it's a pretty large windfall. So these are situations where a bank is not going to help. That's not a typical situation. What's more typical for us is somebody needs to close on a real estate transaction quickly. The bank can't perform. They come to us. We charge them 10% for the note rate, a couple of points. We pay our investors a little bit less than that. But we rescue a lot of transactions in the Bay Area.
What terms did you give this gentleman?
Let's see, this one, 10%, I think 9.9% note rate.
How many points?
A couple of points. I think it's 2.5 points due to the size of the loan.
Save that one for me, please.
Yeah.
And by the way, Patty, I forgot. We forgot to have you give out your information if people wanted to get a hold of you.
Oh, yeah, thank you. It's Patti Cohn, C-O-H-N, with Pacific Union, and I am at 415-722-4842.
Well, Patty knows lots about real estate, so if you have any questions, definitely give her a call. And for investing in mortgages at conservative rates, also conservative loan to values, your fund right now is what, less than 60% LTV, isn't it?
It is, yeah. I just did the report for March, given that it's the first week of April now, and we're at 51% weighted average loan to value.
That's
in the fund.
great. That's just fantastic. All right, here is our third and final commercial break trivia question. Again, we're talking baseball. Assuming the pitcher commits no infractions on the mound, what is the minimum number of pitches he must throw to complete half an inning? See, this is where the 6 outs do it, you know. Okay, the first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer this question. Assuming the pitcher commits no infractions on the mound, what is the minimum number of pitches he must throw to complete half an inning? Stay with us. The Best of Investing will be back with some closing comments.
If that isn't 9, I'm going to quit.
Again, you're gonna quit? Stop quitting.
Oh, that looks like a Diet Coke. I never drink soda. Oh, it just had
It's
such a great.
not Diet Coke.
No, for a minute I just had like this craving
It's
for Diet Coke.
5150. Oh, 50. I didn't get the title.
Yeah.
Living with the Madness. Haha, 5150. I'm crazy.
Same person.
Mm-hmm.
Yeah,
We got a
it's not even
5150 here.
The sugar-free actually tastes better than the sugar.
Yeah, I like the sugar free.
Yes. So now that we're off air, where is that property?
Napa.
Oh.
So it's Napa. It's on acreage. It's a nice home. We haven't ordered the appraisal yet. In fact, I just wrote a letter of intent to the parties. It came through a realtor who Bruce Perillis has known for years and referred to me. Yeah, he's a retired commercial realtor. Lives in Novato. Has been in the business forever. He invests a lot with us. He's in my fund, and he loves individual notes as well.
Oh, good.
Yeah, and he's a good resource.
Okay, we've got some time. 13:58. What do y'all want to cover?
Let's talk about something that we can all share. I mean, I can pontificate on anything, but I don't want to hog the time.
That's because you're a Roman Catholic and you pontiff.
So let's see what.
So what do you talk about? What's going on? Real estate market, future? I don't know. How much time do we have?
13
It's
minutes
a
and
good
8
show,
seconds.
so we can go off on a tangent and get into what seems like a good topic, real estate topic to talk about here.
It's nothing's really that exciting. I mean, we covered.
I know, it's so boring.
Yeah. Well, which is good. We're just in a nice plateau. It's the way it's supposed to be.
I got a bunch of wife jokes, I can tell you.
I know. I mean, I've got like
So you cover
wages. What's happening? Like, but I think like the wages and the
economy.
economy and buyers feeling like they're being pushed out, and I think that's one of the reasons we're down too. Is that buyers?
Okay, I like that.
Yeah.
You guys ready? Because I know Mark's got to go. You ready, Mr. Kramer?
No, I want to sit down a little longer. Let her rip, Captain.
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, one of California's fastest growing mortgage investment firms, and Patti Cohn of Pacific Union Realty. When we got to the third commercial break, we asked this trivia question. Assuming the pitcher, we're talking baseball here, commits no infractions on the mound, what is the minimum number of pitches he must throw to complete half an inning? Mark!
I said at the break, if it's not 9, I'm gonna quit.
You're going to quit because it's not 9. I'm sorry for laughing at you. It's 3, right? Assuming the batter batter goes for the first pitch each time.
Oh, that's right.
That's right. Okay, Patti, you got a couple more interesting things to talk about, wages and all that fun stuff.
Yeah, I mean, everybody wants to know what's going to happen next with real estate. Should I sell now? Should I buy now? Are we still going up? Are we going down? And part of it has to do with what's going on with wages. And so a new report came out that the highest, San Francisco, Oakland is the second highest in the top 10 markets. Detroit being the first, prices shot up 57%. But I mean,
see that.
talk about spiking.
Well, that's because houses were $1,000, now they're $1,500. So,
That's
yeah.
right. That's right, exactly. Last one out, turn off the lights. So anyway, so that being said, here it says that, and so that second is San Francisco, Oakland, and third is San Jose.
Yeah.
So at the same time, prices spiked in San Francisco and Oakland 38.6% over the last 2 years, and wages only went up 7.1%. So
So what does that say about affordability?
yeah, affordability is the lowest ever, and a lot of buyers are having feeling like they're going to get priced out like forever. So there's a frenzy to get in, and at the same time, there's nothing to buy because sellers
Yeah.
aren't selling.
Well, and I've heard from some potential buyers who are so frustrated because it gets to a point where you look at a bunch of houses and you don't really want to just go just buy anything because
Right.
we're not buying shoes.
Right.
You're talking about a place you're going to live in, so you really have to make each purchase that you really seriously put an offer in something serious that you really want to live in.
It is serious. And then, the way I counsel buyers, if, let's say there's 15 offers and you really get caught up in this emotional frenzy of like, I don't care, I want to, and you want to just win,
Yeah.
like a pitchfork, So I just say, make sure it's a number that you will not regret it if you lose
That's
the
a
house.
very good point. Yeah.
But you won't regret it if you get it either.
Yeah.
Because then,
Yeah, very good.
my God, I wouldn't want Loan Club to have me as a member. I've been
Yeah.
too high.
Yeah.
And that's where the lawsuits come later.
Yeah, that's right. You got to kind of protect yourself then.
So we were talking during the break, we were just admitting that, quite frankly, the real estate news right now is kind of boring. And I guess boring is good because, boring means there's
Stability.
Right? There's nothing exciting happening. But it's interesting because one of the blogs I tend to follow is Bruce Norris, is a very famous Southern California-based real estate investor. I'm glad he's in Southern California. He's also a hard money lender, and if he was in Northern California, I'd have a pretty tough competitor. He's really, really good at what he does, and one of the things he does is he gives a lot back to the industry in the form of information and education. He does daily blogs, he does video interviews, and one of his interviews from just the last couple of weeks was this fellow Sean O'Toole, who owns Foreclosure Now, it's Property Radar, but Sean is one of the, also like Bruce, one of the smarter people in California real estate investing, and so when the two of them get together and have an interview, I made sure that I read the transcript, which was on Bruce Norris's blog. And without getting into a lot of the intricate details and the back and forth that they had, one of the things that I thought was really interesting is they brought up the point that just about with every cycle, it very rarely, in real estate cycle that is, it rarely follows previous cycles, and we're in a cycle now where what's happened in past cycles don't seem to really have a factor on what's happening right now. So in other words, we've got very, very low cost of money, but we've got tight inventory. Prices have gone way up, but people aren't selling their homes. The affordability index is at historical lows once again, which should mean that we're looking at impending price decrease, because in previous cycles when the affordability index reached a certain low point, then that indicated that there was a predictor and fairly accurate of home prices going down within 3 to 6 months. But they're saying that they're not seeing that happening now, and they're not predicting that it's going to happen, again, based on, and it really comes down to the fact that there's just so many variables, and that every time we have a cycle, it's generally triggered by something different than the previous cycle. So,
Right.
We're not going to likely have a credit bubble. Money is not likely to be as cheap and easy to get as it was in 2004, 5, and 6 that led up to the last crisis. But we certainly have an affordability issue right now. But money is still relatively inexpensive if you can qualify for it. So there's all these variables. It's cheaper than it ever was historically, yet it's harder to get. but we have this lack of inventory because there's a lot of homes underwater still because they were priced, they still haven't reached the peak from the prior levels. It's just, it's mind-boggling, and it really comes, the bottom line it comes down to is, we can study the charts and read the tea leaves, but really at the end of the day, nobody really knows what's going to happen in real estate in the next year. It's really all, it's guessing based on what's happened in the last year, and it's hard to be forward-looking, even though we had that. I shared that little forward-looking survey that would, at least according to the people who do the survey, would like us to believe that based on their forward-looking survey, we have nothing to worry about. Real estate is very healthy right now, and we don't have to worry about a dip. And then there are others that are still predicting at this point in 2016, be prepared for a price pullback. So again, I don't know.
Well, I can say, if the Bay Area went up 38.7% in the last 2 years, I could say it's not going to happen in the next two, and nor is it going to go down that in the next two. So my prediction is it's going to be pretty flat because we're sort of plateauing. You can, when you're in the fishbowl, you can't always see what's going on, but when you're in the fishbowl, a lot of times you really know what's going on. And being in the fishbowl, it's different than it is. And Mark, you're right. I mean, there's all these things that don't necessarily add up because every single cycle is different.
Yeah.
But what's happening is there is a plateau, and there still is a frenzy to get in, and wages are better here than they are, than anywhere in the country. I mean, and there's still sellers. It's the greatest place to live in the world. So people aren't selling because where are you going to go? Like Edward said, where are you going to go?
Do you find I've heard people say, once you move out of Marin, you can't move back.
A lot of people have that feeling.
But that's not. I
don't
don't really.
get it.
I don't get it because
I don't get it.
seriously, if you would have sold in 2005, you could have easily come back in 2009 or 10.
Yeah. The people that say that are the people that grew up here. They have that. They just have this feeling of lack. Like if I leave, I'll never come back.
Well, the property taxes, that's the single biggest hit for anybody who sells a home they've owned for some time and they're Prop 13 protected. Now you sell your home, you move out for a while, you try to move back, and now you're paying retail both in terms of market price and now you're paying full price on the property taxes. So
well, it's interesting. I was going to have our property tax assessor here on the show, but he was so swamped with it coming up with April 10th that he said, well, you know what, Edward, I'll come on in July when people can do their Prop 8 or just for the assessment.
Yeah.
Which I thought okay, well that's fair enough. We'll have him on then, and it'll be kind of an exciting show.
It's interesting because I mean the whole value of being over 55 and keeping your low property tax doesn't apply to a lot of people.
No.
It just doesn't. I mean because there used to be a lot of reciprocal counties. That doesn't happen anymore in California. There is some that will reciprocate, meaning that you're over 55 and you want to move to Orange County. Sorry,
Well,
can't do it.
I used to say that when they say, oh, you shouldn't tax the old people out of their houses, and I'm thinking, you're right. Just lower mine. Don't raise theirs. We don't have any argument here.
Exactly.
Well,
And you also have to buy less than you're selling. So, I mean, a lot of the people that are in their house for 40 years are selling kind of a lower end house because they haven't done anything. It's a 3-bedroom, 2-bath ranch. They bought for $37,000. It's now worth $1.2 million. So they have to buy something, and it's 1,400 square feet. So they have to buy something less. I'm not going to a condo. So
Less than 37,000.
oh no, I'm sorry, less than like the $1.2 million.
Oh.
But they're only
Well,
in a 1,400 square foot house.
Yeah,
So
but
where are you gonna go?
Well, but a lot of people are downsizing, aren't they? The kids move out. And
Well, they have to
wanna-
leave the area, and that's when it doesn't apply anymore.
Okay.
So if they stay in their own county,
Yeah.
which is maybe a very wealthy county, they're not gonna. You can't move down.
Unless they do the condo or
Yeah.
I guess a retirement home would count if they own the unit. Right?
Yeah.
Because it's almost like a condo.
Yeah, if it can, that counts.
Right.
But it doesn't apply to a lot of people. That's the bottom line.
Yeah, I was going to say, Mark, we've got just a couple of minutes left. I was thinking about what you were talking about earlier today. You're charging 8, 9, 10%, and I'm thinking, if I'm the audience hearing the show for the first time, I'm thinking, why would anyone pay that kind of rate? Because you're talking about low rates at the banks. Being able to borrow for 3% or 4%.
well, a private money loan, which historically was called hard money, and it's still called hard money in many circles, but we tend to prefer to call it a private money loans in 2015.
Or soft.
It's a
hard money
softer,
loan.
easier, yeah, well, because it's more regulated today, but the cost is still, significantly higher than bank financing. In fact, historically, hard money used to be roughly 5 to 6 percentage points higher than the prime rate. Well, the prime dropped so low, and it's been hovering at, it's been at 3.25 now for so long that, hard money rates dropped from 12 to 11 to 10, in some neighborhoods 9, but it really hasn't gone much below that. And really, the market driver for that is really just the investors themselves. A lot of people who've been investing in notes for many, many years remember fondly the days where they got 12% return for making a hard money loan. And of course, a 12% return when prime was 6, 7, or 8, isn't egregious, certainly. It's just a healthy above market return. Well, now a 10% return feels egregious in the land of 3 and 4% mortgage rates, right? But you would think that the market forces would have driven private money loan rates closer to 8 or 7 or even 6, but it hasn't. And I don't really know why, other than people, the public, the investing public, those that invest in mortgages, and have just resisted going below a certain threshold. They just feel that for the risk of making a loan to a private party, and again, I think the risk is quite low for what we do. But still, it's a risk.
Especially when you're funded at 51% loan to value.
But for that risk, that they should be able to get 8, 9,
Hopefully.
maybe even 10% on their money. So really, it's a quasi-market-driven force, but it's also it's such a small slice of the market. I mean, trustee investing is just a minuscule piece of all the investments that people make.
Okay, so go ahead and give out your information. This would be for people who either want to borrow money from you because they can't get loans at a bank, or they want to invest with you.
For fast, easy financing or information on how you can get above market rate returns on your money, give us a call. Pacific Private Money, 415-883-2150, or go to our website, pacificprivatemoney.com.
And Patty, real quickly, give out your phone number and email.
Anything, if you want to buy a house or sell a house, call me, Patti Cohn, 415-722-4842 with Pacific Union.
Very good. Okay, thoughts for the day. You miss 100% of the shots you never take. That's Wayne Gretzky said that. And life is like baseball. When you think a fastball is coming, you got to be ready to hit the curve. Tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Great, fun, fast.